Hello all and welcome back to Finominal UK for another portfolio review. In today's review, we're going to be taking a look at the Vanguard LifeStrategy 80% Equity Fund, which from a recent Interactive Investors article as of the 27th of April 2026, we can see the top 10 funds for SIPP accumulation customers by total value. The third one is Vanguard LifeStrategy 80% equity fund. So it is a very popular portfolio, fund of funds portfolio with assets under management of 15.3 billion. So certainly a popular one, and hence the reason for our analysis. So without further ado, let's head over to Finominal. I've already loaded this within my dashboard at Finominal. And just to show you the how we're doing this in Finominal, using this as a dynamic portfolio. So I'm using the ISIN for the full track record, but then you will note portfolio data on the Vanguard website. As the 31st of March 2026, we've got 100% of the holdings there for this portfolio. So I've set a rebalance of the 31st of March 2026 with those underlying holdings so we get a full look-through analysis of this particular portfolio. Just to note on this particular portfolio, we can see holdings such as US Equity Index, FTSE UK All Share, FTSE Developed World ex-UK, Global Bond Index, Vanguard S&P 500, emerging market stocks. I won't go through all of them, but I'll just go through a quick scroll. So obviously we've got a home bias, UK home bias here in regards to the fixed income and the equity side. Interesting, we've got FTSE 250, FTSE 100 and FTSE All Share. So I think there's quite a lot of holdings that wouldn't necessarily be needed. I don't think you would need all of these 14 holdings. But regardless, it is to note in regards to actual customers, clients, advisors, investing in this, they would only see this in fairness when it comes to their portfolio. But regardless, for creating this portfolio, I think you could create this portfolio in 80/20 without such holdings. But let's continue this analysis. Let's head over to the portfolio analyzer, where I will be benchmarking this against a global 80/20 portfolio, as it is a LifeStrategy 80% passive index tracker fund. To note on fees, very competitive in fairness, 0.2% for the Vanguard LifeStrategy 8% equity versus the benchmark portfolio, actually more expensive at 0.25%. In regards to CAGRs, we can see the Vanguard LifeStrategy's returned a CAGR of 8.3%, slightly less than the benchmark at 9.2%. Volatility has been less though in the Vanguard portfolio at 10.8% versus 12.1% for the benchmark. And we can also see better drawdown protection with a max drawdown of minus 22.57 for the Vanguard fund and minus 26.31% for the benchmark, and very comparable Sharpe ratios as well at 0.59 versus 0.6 for the benchmark. And if we look at total return over the look-through period, we're looking at 8.9 years. Total return 103.71% for Vanguard LifeStrategy 80% equity versus the benchmarks at 119.76% total return. And we can see this performance benchmarking overall has been quite close tracking, I would say. We have seen outperformance from the benchmark in more recent years. Let's continue now. We can also see the distribution of monthly returns, but I'm actually going to move over to asset classes and markets. We already had a look at the holdings underneath on the dashboard. Let's have a look at the actual asset classes and markets now. So as we'd expect, 80% equities, 20% fixed income. But if we look at the breakdown by market cap, majority in large cap, 74% in large, 13% in mid, and 12% in small. So again, very comparable to that benchmark index as well, to note. Now let's look at countries. So we can see a 45% invested in the US versus the benchmark's 54% in the US, so slightly less US exposure than the benchmark portfolio. We've also got slightly higher, only by 2% invested in the UK, so 25% total invested in the UK for the Vanguard LifeStrategy 80% equity funds versus the benchmarks of 23%. And then we can see the other country exposures there. To note, 4% allocated in Japan, and 2% in France, Germany, and Switzerland. But let's continue now with our analysis. Let's look to sectors, and mainly in regards to the differences. So we're seeing sector bets in information technology and financials. There's a particular 3% difference in financials, with a higher allocation of financials, I say, for the Vanguard strategy funds, and a 4.9% lesser allocation to information tech. This will mainly be attributed, though, I imagine, to its decreased US exposure and slightly higher UK exposure. UK, more sort of financial companies would expect to see, and for the US, more infotech and such, is what I would note. Let's look now to alpha and factor exposures. We're looking at return-based factor exposures initially, where we can see overall seems to be sort of a negative equity factor value beta, should I say, for this particular portfolio, which makes sense given mainly invested in large cap quality stocks. We can see a positive beta to the quality factor in recent years. But if we scroll down, we can actually see these correlations and betas to equity factors more clearly. So it's got a minus 0.2 value factor beta and a slight positive 0.1 quality factor and low volatility beta for this particular portfolio. We'll look to risk. Specifically, I'm going to go over to drawdown and scenario analysis, where, again, looking at the drawdowns against the benchmark, we can see where they have been quite close tracking, but certainly between 2021 and 2024, we did see increased drawdown protection from this passive fund of funds portfolio against the benchmark. So certainly another positive to note, and we can also see the scenario analysis of those played out as well. We can look to portfolio simplification. Just note this is a 14 fund portfolio. So how can we take that 14 fund portfolio to simplify that? In doing so, this can actually be simplified with just two holdings: the FTSE 100, 41.8%, and the Vanguard S&P 500 at 58.2%. So this is based off, takes asset classes and factor exposures. That's how it's able to do that. Obviously, it doesn't account for the fixed income element in that. And in regards to an even simpler version of that, it would just be to invest in the actual the ISIN of the LifeStrategy fund, as this is a fund of funds portfolio. So overall, my analysis and conclusion for this particular portfolio is positive. It's certainly cheap, 0.2%. It's delivered good returns with good drawdown protection. It's quite comparable to that of the benchmark. Slightly less of a CAGR, but again, we've seen better drawdown protection, and it's done it at a cheaper fee. So it is no surprise why we see that as being the third highest held fund for SIPP accumulation customers by total value, according to Interactive Investor. But that brings me to the end of this analysis. I do hope that was helpful and informative as always. And if there are any other funds or portfolios you'd like me to review next, please do leave them in the comments. Other than that, please do like, subscribe, and we'll see you all in the next one. Thanks all.